Welcome to the Accountancy People. This video is to introduce Hussein from Merit Accountants. The Accountancy People is now part of Merit Accountants. I want to introduce Hussein, talk a bit about some tax savings that he's done, and then we're going to do a bit of speculation and things that we might want to do in preparation for the Chancellor's budget, which is scheduled for November. I'm very pleased that Hussein has joined from Merit Accountants. So Merit Accountants and the Accountancy People are now one. And what in particular Hussein gives the practice is a higher level of tax competency. He's used to dealing with the revenue through tribunals, giving advice to other accountancy firms about tax affairs. He has a lot of knowledge and expertise with the revenue and also a great relationship with the revenue, which allows us to make sure that we don't get into trouble with the revenue in essence. I've got some examples of that. We've benefited clients through the employment allowance. When they made you pay national insurance on more of your income, that gave clients a problem, and I think your solution was to change who is involved in the business, because if you've got more than one person in the company, then you get the employment allowance that you wouldn't otherwise get. I think you've done some work on that, Hussein.
Yes, so thank you so much, James, for the introduction. So talking about the employment allowance, a single director company does not qualify for employment allowance, and therefore on a salary of £1,000 they would roughly have to pay about £88 a month. By taking on a second employee, even if it's just for a month, paying them at least over £416 per month would enable the company to qualify for employment allowance, and therefore wipes out the £88 per month on the director's salary, and that is a saving of £1,000.
£1,000 a year, which is useful.
Yeah,
yes. It's really useful.
Yeah.
And I think I like this. You was telling me a story before about some capital gains tax issue that a client had, where the revenue was trying to get capital gains tax when they sold their main house, which obviously normally you wouldn't pay capital gains tax when you sell your main house. And the letter, when Hussein got involved in it, what the letter say? Remind what the letter said.
So the client sold their property and it was their main residence. HMRC came back asking for capital gains tax on the property and a submission of a CGT return. We reviewed the case. We wrote to HMRC explaining to them that main residence relief is applicable and therefore there is no capital gains tax to pay. HMRC replied confirming that the inquiry will be closed on the basis that Hussein from Merit Accountants has reviewed the case and confirmed that there is no tax due, and this goes to show the credibility.
It's the relationship that you have, isn't it? I mean, if you've got a good relationship with the revenue, it counts for a lot, because they do know who they're dealing with.
Yeah.
And it's a bit of a stick and carrot. They know that you tell the truth and you do things properly, but also they know that they have to do things properly because you'll be on to them if they don't, which is great. And then also you've done some work on stamp duty on commercial properties, where the revenue, I think, were argue about the sale as a going concern, which affects how much stamp duty you pay.
Yes. So we had a client who was purchasing a commercial property. The seller wanted to charge VAT on the selling price, and stamp duty would be applicable on the VAT inclusive price, which would cost extra to our client in stamp duty, and the extra VAT that the client, our client would have had to pay, would have been a cash flow issue. We stepped in, structured the transaction as a transfer of going concern, and there was no VAT charged by the seller, and the stamp duty was also calculated on the VAT exclusive price, and therefore saved the client a huge amount of
cash flow and actual money.
Yeah.
Very good. So let's get into the budget, because it's good to speculate about the budget, but I think my take on the budget is there's a huge revenue gap. They need to increase taxes quite substantially, and they've sort of backed themselves into a hole because they said they won't increase the main taxes. So if they're not going to increase the main taxes, they're going to have to increase everything else. So not a week goes by without another suggestion, but these are some other things. So capital gains tax, they've had one bite of capital gains tax. Do you think they'll have another bite at it?
Yes, there is some speculation on the rates that may change. However, the more important point here is that they may be looking to introduce capital gains tax on private residences for individuals. Currently, they are exempt from capital gains tax, and this would mean that individuals who are selling their homes to move into another home or downsizing would now have to pay capital gains tax on their property. Although this is a speculation at the moment.
But the advice is, if you've got a transaction that's just about to go through, why not just put it through before the budget day? And in terms of the rates, they may increase the rates. If you're going to sell something anyway around budget time and you're going to have to pay capital gains tax, why not make the transaction before budget day rather than after budget day? I think those are the two takeaways.
Yes.
So there's been a lot of speculation about increases in inheritance tax and maybe changing the whole inheritance tax environment. My take on inheritance tax is that they could introduce a capital transfer tax, which is something that we have in the 1970s and 1980s, where even if you transfer assets during your lifetime, you still have to pay some tax. So that would be a huge change. And the other things that they could do is reduce the limits, or they could increase the 7-year rule. So if you give something and then live 7 years, at the moment you don't pay tax. If they increase that to 10 years or for longer, then that would increase the take on inheritance tax. Again, it's one of those things where if you are going to give some money to your children as a lifetime gift, make it before budget day. Would you make it before budget day?
Yes. Currently, any gifts which are to individuals are treated as potentially exempt transfers, and there is no immediate inheritance tax to pay. But this may change, and any gifts would then be subject to inheritance tax or an immediate inheritance tax charge. And therefore, if you are looking to gift any assets to your children, it's important that this is done before budget day.
Yeah, I mean, it's particularly important if you're trying to give deposits for your children's houses or something. I think that's what a lot of people want to do. And if you're going to be paying inheritance tax on a gift just so that they could get a mortgage and live somewhere decently, it doesn't seem the most equitable thing in the whole world. I think this is a racing certainty, actually. So national insurance on rentals, at the moment rental income is received free of national insurance. What do you think about that one?
Yes, currently individual landlords cannot claim mortgage interest. They can only claim 20% as a tax reducer. And now with the potential national insurance on rental income, it would mean individuals would need to consider the ownership structure of the properties and perhaps consider moving the properties into a limited company to avoid national insurance on the rental income. And
you still do pay, of course, you do pay dividend tax if you take it out. So you sort of got, but there's a balance between being in a company and being owning privately, and it just puts it towards a little bit more towards having a company, doesn't it?
Yeah.
I think a really difficult one is if they got rid of stamp duty altogether on houses and had some sort of wealth tax or tax on property. They've talked about that, but I don't know whether they'll dare to change it, because what it means is that people who are buying a property, younger people, won't pay stamp duty, but then people who've already paid stamp duty will then have an additional tax to pay, which I don't imagine they'll like. I don't know what you think.
Yes. So abolishing the stamp duty land tax and bringing in a wealth tax on property, although they did propose a threshold of £500,000 and properties above that threshold would be subject to wealth tax. But as you rightly said, if someone has already paid stamp duty when they purchased it and now they have to pay wealth tax every year, this will be quite costly for individuals and may affect the property market as well for the more expensive properties.
So £500,000 house in around Stalybridge, that's a house, but in London it's a flat, and there are parts of London where it's a bedsit. But they're labelling it as a mansion tax, so I don't think that somebody who has a flat in Fulham or something thinks they've got a mansion, but there we go.
Yeah.
And the last one, I've just heard recently that they're thinking of putting VAT on private healthcare, just like they did put VAT on private schools. I think it's quite a brave one if they're wanting to do that. I don't know do you think they'll do that one?
Yes, introducing VAT on private healthcare to relieve the burden on the NHS. It would actually be important for private healthcare to be more accessible to individuals, and therefore introducing VAT on private healthcare does not help. In my opinion, they should make private healthcare a tax-free benefit. individuals, which would enable employers to provide private healthcare to their employees and therefore relieve the NHS of the heavy burden that it is under currently.
The reason I think it's quite a brave one is because very often the reason that people go to private healthcare is because they can't get the service in the NHS. So you go to a physio in the private sector because you can't get the physio in the NHS, and with a number of these things, that's the reason that you're doing it. So I think it's quite brave of them to then charge a tax because you're not getting the appointments that you would have wanted in the NHS. So good luck with that one, but you never know, they might do it because they are definitely fishing around for tax. So those are the main things we've spotted and that they've been speculating about. The way that they do this is that they put something in the papers and in the media, and then they see how we react, and then they decide whether to actually do it or not. So no doubt there'll be other things, so we'll keep you up to date. If you need help on any of these things and you just want to discuss them, then Hussein and myself will be more than happy to receive your calls. So thank you, and we'll do regular updates on tax and accounting issues, so please like and subscribe if you'd like to see more information.